Hello and welcome. We have seen stock markets decline extensively. We have seen gold and oil prices rise. We've also learned that the West Asia conflict has escalated. So, is what we are seeing in the equity and commodity markets largely driven by what's happening in West Asia? Well, to decode that, I'm joined by Pranjal Kambra. He is the founder of Phenology Ventures. Thank you so much for your time. Your first thoughts on what really are the factors for this sharp decline in equity markets, as well as this rise in gold and oil rates?
Oh, definitely. So the conflict, West Asia conflict that you mentioned, market definitely considers that a big factor. But broadly, when we look at market being sensitive to global events or just about anything that's remotely or majorly important, it's because when the valuations are stretched. So if the market is expensive, it'll latch on to small reasons to correct. If the market is really cheap, it will rise up substantially even on a good news. So fundamentally, broadly, we have to understand that all benchmark market caps to P, average P of the market, historical P of the market, whatever metrics we look at, market is expensive. That doesn't mean that it won't go up or that investors should take out their money, but we need to understand that when market is expensive, it usually reacts in this way, that any small news that can disrupt market will react more sharply to it. But for investors, this doesn't mean that you start withdrawing or taking out your money. You don't try and time the market, you play the market. What it means for you is that if someone is in say 50 plus, if someone is 50, 55, 60, and they don't have a lot of future cash flows coming in. So if someone is very young, say 25, 30 years, they don't worry about market levels at all, and they shouldn't, because even if the market doesn't do well for the next 2, 3, 4 years, they'll always have cash flows coming in. Youngsters have cash flow coming in on the future, so they can always average it out. But if someone who is living on retirement money or whose major earnings were in the past and now they want to milk that and live the rest of their life, this is the time when you don't invest a lot of fresh capital at one go. So this is what it means for investors.
All right, that's largely your advice to investors. But for those saying, okay, tell us what is likely to happen in the near term or the long term. So, if I were to ask you your expectations for the stock markets as well as for the commodity markets for the near term and the long term.
The honest answer is that when you are in the finance domain, when someone like me who's in the wealth investment advisory domain, we are supposed to know these answers, where the market will go. But the honest truth is, I don't know. If you ask me, I thought the market was expensive at 70K. It went up to 75, 80, 85. So I think I'm not good at predictions, and I like to, philosophically, I want to focus on things in my control. Can I select better stocks? Can I be more disciplined for us and for our clients as well, rather than worry what will happen in the short run? Because 50% of the times I'll be wrong, and 50% of the times will be sheer luck. So I don't know.